John Spallanzani from GFI Group. Joining us also is Paul Schatz of Heritage Capital Markets and our own Rick Santelli. And Paul Schatz, I'm going to start with you because you make a bold statement. You feel right now Ben Bernanke is irrelevant. What do you mean?
Bill, I think the Fed's done, for the most part, they've laid all their cards on the table. If you're playing poker, they're all in. It's QE unlimited. If $40 billion a month in new money is not enough, they'll go to $50 billion a month and 60 and 70 and 80 and 90 and 100. Each successive QE program has had less and less of an impact. And the Fed chairman said himself, I mean, they're targeting the markets because I think we all know mortgage rates are at lows. The problem is people can't get mortgages. It's so, whether they go down another quarter point's not going to matter. The Fed is all in. They're going to keep going until it doesn't work. The real solution is in Congress. I think we all know that our politicians aren't adults. It's not going to work.
Rick Santelli, what do you think?
Which is why, you know.
Go ahead, Maria.
I totally. Oh, go on, Maria.
No, please.
I totally agree with Paul. I think he nailed it. And not only that, here's how weird it was today with traders on the floor and Ben Bernanke. They obviously were keen on the notion that they just don't think there's a big return to QE3 and unknown future exit problems. But even about things that should be easy to research. For example, he talked about Milt Friedman and Anna Schwartz. And Anna Schwartz helped co-author a monetary history of the U.S. But I was sent by traders an October 18, 2008 Wall Street Journal piece by Brian Carney that talked about Anna Schwartz. She didn't agree with bailing out the banks. She didn't agree the problem was liquidity. So she, in many ways, disagreed with a lot of the aspects of QE3 as early as 2008.
You know, I don't know how you could say that the Fed is irrelevant when, in fact, the Fed has been the only game in town. You don't have any stimulus coming from the White House or Congress. I mean, but it is interesting, Paul, that Bernanke stressed that the Fed's pledge to keep rates low until mid-2015 is not a forecast of a weak economy over the next 3 years. You buy that? Why keep rates at these levels then if it's not an indication that we're talking about a tough situation?
I think you're right. The Fed's not not being totally transparent. They do see a problematic economy. They do see systemic problems with employment. The problem is not liquidity. There's plenty of liquidity. There are geopolitical problems, the problems in Congress, the problem with the tax code, the problems in our government, the administration. Also, listen, the Bernanke said we don't see a recession coming, but to be fair, he didn't see 2008 coming either.
Who's that, John?
Maria, the fact that everyone's saying that QE is not having any effect means that they really are missing the boat. There was $3 trillion worth of corporate issuance in the year to date so far. $1 trillion worth of bonds were sold by corporations. That reduces, obviously, betters their balance sheets, reduces their rates. So for the next 10 years, these corporations are going to be having the benefit of cheap money. 150 or 100 basis points over treasuries to issue cash, I think that's a great deal. They're using that money to buy back stock. They're using that money to pay dividends. Tom Lee had a great piece that says the outstanding shares on the New York Stock Exchange are as low as they have been in 1990. So what's happening is you have a run-up to QE. The market anticipates that. So of course the response is going to be muted to the QE. But subsequent months later, we then see the market continue to grind higher. So the fact that you know, just because on the day they announce QE, there's no big pop in the market is missing the point of what he's doing.
Well, Todd Schoenberger, you feel it's still all systems go. You're very bullish on this market still, aren't you?
That's right. You definitely want to go long right now, Bill, and you want to stay there going into the new year. Look, what Maria said was best. Ben Bernanke's being proactive. He's the only guy being proactive in Washington right now. You guys are missing the boat completely if you don't think QE3 is going to be great for the bulls, especially for the markets. Look, nothing else is out there. You have a 1.3% GDP print. Ben Bernanke said it best today. We're not fearing recession, but we're close to it. We're dancing with it. Look, Americans right now are waving the white flag. They're giving up. They need something out there. Ben Bernanke delivered it. Wall Street traders know it, and you can talk about the long-term impact on this, Rick, but you know as well as I do, this is great for stocks, and it's great not just for the short term, but also well into next year.
Hey, there's been a lot of powerful countries in the world that printed their way into oblivion.
One more comment.
Fair enough.
Yeah.
How is it good for the economy? How is printing more money good for the economy?
Well,
How is it good for the economy?
Think about the Tesla. It misallocates capital into all the wrong places. You give a lot of money that's low interest rate, easy to get, and certainly some corporations have benefited. Certainly doesn't seem to directly correlate with
$3 trillion.
unemployment.
You sound like a politician, Rick. You sound exactly like a politician. You're absolutely right. The long-term impact is going to be
about
bad.
this policy. A lot of debate about the policy, but no doubt about it, when you look at this equity market,
We don't have to worry about the
average
policy
trader out
until
there is
2015
saying,
when he ends.
don't fight the Fed. We'll see about that. Thanks, everybody.
That's
We'll
right,
see you soon.
Maria.
We appreciate your time
Thank you.
today.
Yeah, we got to fight the clock today. Have you ever tried to have a conversation with people who are miles away from you all at the same time? That's not easy. But we anchor together well, don't we, Maria, here? We're heading to